This is All About Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee, checking in for a live look at Bitcoin. The CoinDesk Bitcoin price XBX index is at 33,200 and about $50. Bitcoin is trading pretty flat over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app. So Bitcoin is trading under pressure as currency markets price in today's jobs growth surprise, with the U.S. adding 850,000 jobs in June compared to the 700,000 estimate, which could amplify concerns of an early unwinding of stimulus by the Federal Reserve. The dollar index, which tracks the greenback's value against major currencies, clocked a 3-month high. The index has been rising ever since mid-June, when the Fed unexpectedly moved the timing of the first interest rate hike earlier to 2023. The DXY's recent rise hints at a strong payrolls figure, according to City Index. The higher than expected number would validate the Fed's recent hawkish turn, possibly bringing more pain for Bitcoin and other asset prices in general. Fed tightening, that is, higher interest rates or unwinding of liquidity boosting asset purchases, makes the dollar more attractive and dilutes the appeal of inflation hedges like gold and Bitcoin. As such, fears of the Fed gradually unwinding stimulus tends to weigh on Bitcoin and other risk assets. Joining me now to discuss BTC price and other Bitcoin news is our Week in Review panel with CoinDesk Managing Editor of Technology, Christy Harkin in Toronto, and Managing Editor of Markets, Brad Cowan in Austin. Good afternoon.
Hello, Christine. Hi, Brad.
Hey, Christine. Hey,
good to see
Christine.
you. All right. So, Brad, markets, we've been in a narrowing trade range this week between $30,000 and $35,000. We've had regulatory headwinds in the form of China cracking down on miners and cryptocurrencies, the Fed raising rates potentially earlier than expected, tailwinds in the form of Bitcoin adoption as legal tender in El Salvador, crypto infrastructure being built. So what is the catalyst that will get us either higher and lower than this trading range that we're seeing?
I think that's the $64,000 question, Christine. I mean, just looking at the charts earlier, and we're now in the 6th straight week of this range between $30,000 and $40,000. I mean, generally speaking, again, if our old pal Galen would hear, he would say the big catalyst would be institutional adoption, people buying more Bitcoin. And, what is clear is that every time we hit the $30,000 range, which, last week we had that crazy week and we dipped below 30,000 and we're right back up in this $30,000 to $40,000 range. So it does seem like there's a lot of buyers for Bitcoin at $30,000. What gets it going higher? We get to maybe a new phase where the news suddenly turns really bullish and people do start buying and the price starts going up, and then maybe the fear of missing out gets back and the sentiment starts to improve. It's probably going to be something like that, but nobody really sees that on the horizon anytime in the short term.
Well, one of the news items we received this week was that Mircea Popescu was reportedly found dead in Costa Rica from a drowning, apparently, by local papers have been reporting that in Costa Rica. Now, he was one of the largest Bitcoin holders, reportedly, 1 million Bitcoins. And he was a Bitcoin pioneer. John McAfee also died the other week, which theoretically, these are big Bitcoin holders. Brad, could that mean a significant amount of Bitcoin is out of circulation?
I mean, I guess I'm not familiar, with their personal situations, like who owns their passwords, if I mean, there have been stories of people disappearing before, and their Bitcoin is gone. I don't know if if their Bitcoin can be sold or if it is out of circulation. But I mean, big holders, you're right. It's a little bit less supply.
Another top story of the week is Strike. They're offering near zero fees on Bitcoin purchases in the United States, giving incumbents a run for their money, such as Coinbase, PayPal, Square's Cash App. Christy, what's the significance of this move?
I think that it offers some really great buying opportunities for people who have access to Strike, which at the moment is not even all of the US. And I think El Salvador will be included in this. For example, I'm in Canada, I can't use Strike. If you're in New York, you can't use Strike. But what I think is the most significant part of this is the sort of ethos behind it, which is that Jack Mallers, he's really on bringing Bitcoin to the masses. And his philosophy is that open source money should be free to acquire. You should be able to get Bitcoin without having to pay a bunch of middleman fees. That's what it was designed to do, was to be peer-to-peer and not cost you extra and not have to pay out to third parties in order to trade and sell it and buy it and use it. So I think he's really putting his money where his mouth and his heart. And that, I think, is what is going to really give the industry a bit of a kick in the pants. You have to remember that Coinbase is not strictly a Bitcoin company either. It sells it trades in 70-something cryptocurrencies. And every cryptocurrency, of course, was created on equal footing as far as its ideology is concerned. So yeah, it is where Jack is saying it's sort of a race to zero. That's where fees should be going with Bitcoin. And of course, keep in mind, Lightning itself, the Strike is built on Lightning, and Lightning is a very, very cheap proposition to be sending Bitcoin on in the first place. So it really does follow that whole idea of keeping fees at the equation and allowing everybody to get to it and not have to pay an arm and a leg.
Right. And it does push forward the potential for mass adoption. I just recall in the Wall Street Journal this week, Bitcoin for the People was on one of the pages. It was bought up by NYDIG and a crypto payments giant, NCR Corporation. They're joining forces to make Bitcoin available to 24 million customers across the 650 U.S. banks that NCR services. The firm's obviously, there is NCR saying that they've been having a lot of demand from clients whose customers have been buying crypto through outside exchanges. And NCR has about 160 countries around the world with their ATMs as well as kiosks. So we're definitely seeing this crypto infrastructure being built. All right, we're going to take a quick break.
And they're talking about expanding Strike as well. They're working to get licensed in other jurisdictions. So this is really just the beginning.
Excellent. All right, we're going to take a quick break there. We'll have more BTC discussion with our CoinDesk panel after the break.
From fueling local economies to connecting global markets, the future of money is taking shape now. CryptoState by CoinDesk will bridge communities of crypto investors, thought leaders, and developers from around the world. Together, we will tell the global story of decentralized finance. Join us for this virtual event series as we stop in Nigeria to dive into the movements that are disrupting markets and changing communities. Register today.
All right, welcome back. Looking ahead to next week, let's take a global outlook. So CoinDesk's Emily Parker has suggested that, with the 100th anniversary of the Chinese Communist Party on July 1st, that could explain China's timing for its stricter stance on cryptocurrencies over the past few weeks. Do you think that strict stance will continue, Brad, in terms of, and if so, or if not, what would that impact have on the markets potentially?
I mean, it sure looks that that China's pretty serious. They've shut down all these Bitcoin mines, and we've seen that in the hash rate going down. And maybe there's signs, if we look at the hash rate we reported this week, that it appears to be stabilizing kind of in that high 80 exahash per second range. So maybe there's signs that the worst of the China crackdown is behind us. And of course, they've also, cracked down on some of the big exchanges. But the news is kind of out. That's been in the market for a few weeks. And prices are holding at these levels. So it may not have that much more of an impact. I guess we can wait and see. One thing I want to go back to, the discussion of the NCR and NYDIG, and they're taking out full page ads in these newspapers. And if you talk to like the Bitcoin maximalists, they will often say that the only value in a lot of the altcoins is the marketing spend. The coins have value because of marketing spend. Well, there's a lot of money being spent on Bitcoin marketing by all these firms that are marketing Bitcoin. You would think that should potentially at some point be a catalyst. This is all of our society these days is driven by the internet and ideas that can kind of penetrate out into the ether. And you would think that, eventually all this marketing spend would translate into some incremental Bitcoin. I was just thinking about that as we were talking about that story, Christine.
Yeah, absolutely. And going back to that, the China news, a lot of miners outside of China are looking forward to generating greater rewards, profit, and the upcoming mining adjustment. When will that be happening, Christy?
That is going to be happening overnight, probably 10 hours, a little over 10 hours from now. The difficulty will adjust tonight. So in case you haven't been following along, Bitcoin mining difficulty is how difficult it is for miners to produce the hash that will find the next Bitcoin block. And miners compete with each other in order to do this. And the algorithm is adjusted every 2 weeks to make sure that we are getting blocks at a steady, predictable rate of about 1 block every 10 minutes. And every block that's produced produces new Bitcoins for the miners that find it. Now, what's happening is because we had such a drop off of miners over the past 2 weeks, the hash rate dropped. So there have been fewer miners competing to find the next block. When you have fewer miners on the market, it becomes easier. There's less competition. So the blocks can be found at a higher rate. And that's not good for the consistency. So the algorithm adjusts and makes it slower, makes it harder rather for miners to find the next in this case, easier to find the next block because in this case, there's fewer. So the great thing about difficulty adjustments for if you're a miner is that it causes miners to either join or leave the network. If difficulty goes down, like it is right now, more miners will join the network as you can make more money than in other periods. And this is something that I've been hearing, and you've been hearing from miners, and Will Foxley from Compass Mining is the one who had this discussion with me. And he said that when it goes up, miners will sometimes leave if they can't remain competitive. But when it goes down, they join in. And that's what's happening now. And it's becoming, yes, the miners all left from China, but they are now starting to come online in other parts of the world. So we're starting to see the adjustment go down. Now, in May, it went way up. Like there was a whole lot of exahashes happening. And this time the adjustment is going to go down like 27%, which is quite a bit. But please keep in mind that, yes, the adjustment is going down. And yes, there are fewer miners online securing the Bitcoin network, but there are still a lot. We're only going back to a position that we've been in the past in terms of the number of miners. And it will continue to rise as the mining rigs relocate in different parts of the world.
Very cool. All right, Christy, Brad, thanks for joining me this afternoon. Appreciate your insights.
Thanks, Christine.
Have a good weekend.
You
All right,
too,
that was our
Christy.
CoinDesk Week in Review panel with managing editor of Markets, Brad Cowan. That's it for All About Bitcoin. I'm your host, Christine Lee. We'll do it all over again on Tuesday, as Monday is the holiday for the July 4th Independence Day weekend. So join us on Tuesday morning at 3 p.m. or Tuesday morning at 9 a.m. in New York for First Mover, Tuesday, 3 p.m. for All About Bitcoin. You're watching CoinDesk TV.